Hey everyone, in one of the recent videos I discussed 5 FIs that I track very closely to identify investment opportunities. Among them, one FI that I deeply respect for their stock picking skill is MIT, world's #1 institute for technology, even more prestigious than the IITs. So MIT has an investment arm that also holds top Indian companies in their portfolio. The best part about MIT is their clear goal to invest for long-term wealth creation. They don't buy and sell stocks frequently. Rather, they hold stocks for many years, and they have a great history of identifying exceptional companies from the Indian stock market. For instance, they invested in KPIT in June 2020 when it was trading at levels of 60 rupee. Today, KPIT is trading at levels of more than 1800. That's more than 30 times return in last 4 years. And the best part is, MIT still holds the same amount of stake in the company. That clearly shows their long-term vision. Likewise, they invested in Newgen Software in June 2020 when it was trading at bonus adjusted levels of 70 rupee. The interesting part is when Newgen Software fell down 50% between July 21 till November 22, rather than panic selling like retail investor, MIT actually increased its allocation 3 times from 1.6% to 4.15%. Today, Newgen is at levels than 1100, which means more than 15 times return for MIT, and it continues to hold this allocation in the company. Not only KPIT and Newgen, MIT has a long list of multi-baggers in its portfolio, including Action Construction Equipment, ITD Cementation, Radico Khaitan, RK Forging, and so on. Although off late, MIT is very selective in its investment in the Indian market. In fact, it is reducing stake as the mid-cap and small-cap segment of the Indian stock market has become expensive. But recently, it has added a pharma stock in its portfolio. Company name is Marksans Pharma. In the latest shareholding pattern, MIT has purchased 2.3% stake in the company. In fact, FI has consistently increased stake in the company over the last 12 quarters, and public stake in the company has consistently fallen from 48% all the way to 33.7%. And when I deep dive into the business, I found it quite promising. Just to give you an idea, company's management has guided for 50% growth in its top line in the next 2 years. And today, company is trading at P of just around 30-31. So in this video, we'll do the fundamental analysis of Marksans Pharma that would include its business model, leadership, financials, key growth driver, and company's growth plan to capitalize on those growth driver. Then we'll look at the key risk in the growth thesis and finally cover the valuation part. But before we discuss further, if you are here just for stock tips, my video won't be of any help. Because A, I cater only to long-term fundamental investor, and B, one of the biggest requirement to create wealth in the stock market is conviction and patience. And that comes only when you do the research yourself. Otherwise, even a small 10-15% correction can create panic. And when you understand the business and its growth potential, that correction can actually create buying opportunities. And that is the key for wealth creation. So don't blindly invest in any stock. Make sure that you do your research before investing your money. And if you find my analysis useful, you can also explore my exclusive weekly video series where I discuss my own investment ideas and top conviction picks along with reasoning. On top of that, I track more than 200 quarter results to identify potential investment opportunities. You can get the details on my website or via the join button. With this, let's get started with today's video. So Marksans Pharma came into existence in 2001 when it got demerged from Glenmark Pharma under the name Glenmark Laboratory Limited. Later in 2005, Glenmark Laboratory Limited and TASC Pharma merged to create a new entity named Marksans Pharma. It has been a roller coaster journey for the company since then. During 2007 to 9 period, Marksans acquired a few companies from Australia and UK by raising debt. But that integration did not work out well and company got into losses. However, company's management was highly focused and over the years, eventually Marksans Pharma became net debt free and surplus cash along with very good growth in top line and bottom line. So basically, Marksans Pharma is engaged in the research, manufacturing and marketing of generic pharmaceutical products that include OTC product, that is pharma product sold over the counters that does not require any doctor prescription. Plus, it also sells generic prescription medicine that include your capsule, oral liquid and ointment. This slide gives a good picture of company's business breakup. In FY24 revenue breakup, 26% business was from the prescription segment and 74% from OTC, that is over-the-counter medicine. And this segment shows the revenue by geography for Q1 of FY25, where US and North America contribution is 42.5% and has grown 30% year on year. UK and Europe contributed another 42.6%. Australia and New Zealand has 11% contribution, followed with 3.8% from rest of the world. So basically, Marksans Pharma is completely into export into regulated market. Now, top therapeutic segments in OTC where Marksans operate include your pain management that contribute 44% in revenue in FY23, followed with cough and cold with 14% contribution, then cardiovascular has 9% contribution, central nervous system with 8%, gastrointestinal with 9%, and rest is your diabetes and so on. In OTC business, it can be further divided into two segments. First is store brand where Marksans manufacture medicine as private label for store. And second is own label that include its brand. Currently 80% OTC business is from store brands and 20% from own label. This slide shows the manufacturing facility of the company. Within India, Marksans has existing manufacturing facility in Goa that manufacture capsule and tablet. It is one of the biggest manufacturing facility in Asia with capacity to manufacture 2.4 billion soft gel and hard gelatin capsule per annum and 6 billion solid tablets per annum. It's fully automated and generic pharmaceutical manufactured from this facility are exported across the globe. It has the required accreditation including US FDA. Please note that last year Marksans had acquired Teva Pharma Goa facility, and with this acquisition, its Indian capacity would double from 8 billion units per annum. Then it has manufacturing facility in UK that manufacture non-sterile liquids and powder sachets and supplies to UK, West Africa and Middle East. Then it has manufacturing facility in US that manufacture hard gels, tablets and capsule with capacity of 6 billion tablets and hard capsule per annum. This slide gives a good overview of company's R&D capability that include 4 R&D centers, 2 in India, 1 in UK and US each. Company has a team of more than 50 scientists, more than 70 products in pipeline, more than 350 dossiers filed with 300 approved ANDA by US FDA. This figure shows the annual R&D spending also as percentage of sale. I hope you got a fair idea of Marksans' business model. Now let us look at company's leadership profile. So Marksans Pharma founder, MD and chairman is Mr. Mark Saldanha. He is the second generation member of the Saldanha family, where his father, Mr. Gracias Saldanha, founded Glenmark Pharmaceutical. Mr. Gracias Saldanha had 2 sons, Glenn and Mark, and that's where he named the company Glenmark after his 2 sons. Although Mark Saldanha got separated from Glenmark Pharma. Now he is an industry veteran with more than 30 years of experience and has been the key person for growth behind the company. Apart from Mr. Mark, other leadership of the company is also highly experienced with many years of industry experience with top pharma companies across the world. I don't want to get into the details. Kindly check the leadership on their website or in company's presentation. Now let us move on to the key growth driver for the company and Marksans Pharma plans for the future. Now there are multiple factors that would drive the growth in pharma sector. First of all, there's an aging population, especially in the developed countries. Then second growth driver is rise of chronic disease. For instance, disease like hypertension, diabetes, chronic respiratory disease and cardiovascular issue are rising across the globe due to rising urbanization, stressful work culture, lack of physical activity and poor dietary habits. Now within pharma, if you look at the OTC market specifically, there's a healthy growth in this segment. So first growth driver for OTC market is rise of digital health. Increasing use of technology in healthcare has led to the popularity of digital health platform and mobile health application. So this trend is expected to drive the expansion of OTC drug market. And second driver is focus on self-care. So due to greater focus on healthcare, there's a higher demand for OTC drug. Moreover, there's a growing demand for OTC medication derived from natural ingredient. Now the question is, how is Marksans Pharma planning to capitalize on this growth opportunity? So first of all, Marksans Pharma is planning to increase its penetration in US. It aims to double OTC revenue in the US. In the Q4 con call, management mentioned that we are very bullish on the US market. It is our growth driver for the next 2 years. We have increased our capacity, we have increased our presence out there, our product portfolio out there. So we are expecting to double our revenue in the US market soon. So literally we are quite optimistic and bullish where US market is concerned. And when management was asked, what gives you the confidence to grow 50% in the next 2 years? Management mentioned that we have a good order book status to give us visibility of reaching to this number. Further, they mentioned it's still very small number for a market like US. So it's not something that is novel or is unique in any way, but it is still at tip of the iceberg. On top of this, Marksans Pharma is expanding its product pipeline across therapeutic segment. This slide gives a good idea on the product expansion pipeline. In the UK, company has planned 34 new filing over the next 3 years. In addition, 16 products are already filed and awaiting approval. In US, 32 products are in the pipeline. In Australia and New Zealand, 10 products are in the pipeline and expected to be launched over the next 2 years. For the rest of the world, 124 products are approved, 120 products awaiting approval, and 108 products are in the pipeline. In addition to this, Marksans has recently acquired Teva Pharma Goa manufacturing facility with capacity to manufacture 8 billion units per annum. It would happen in 3 phases. Phase 2 expansion to 6 billion units per annum will be completed by end of FY25. As per management, our expansion and scalability of the acquired unit of Teva Pharma is proceeding according to the plan and will see meaningful revenue contribution from the unit in FY25. So that would be another key growth driver in FY25. On top of this, company is sitting on cash balance of 674 crore in March 24. So there is enough dry powder for inorganic growth via acquisition. Marksans is also in the process of backward integration through manufacturing API for 4 major products for its captive consumption. In the next 2 years, company plans to achieve both backward and forward integration. That would result in improvement in company's margin profile and eventually would get reflected in the bottom line. Overall, management has guided for 3,000 crore of top line by FY26. Just for reference, company's FY24 revenue was 2,177 crore. So that's nearly 50% growth expected in 2 years, and margin would remain in around 20% plus range. In fact, management is quite confident on achieving these numbers. When asked in the con call, management said that last year we had projected 2,000 crore and we landed up at 2,177 crore. I believe in the next 2 years we'll definitely touch 3,000 crore. Now let us look at company's financials and valuation. If you look at the historical data, Marksans struggled financially during 2015 to 17 phase where top line got stagnant and margin fell down sharply. That badly impacted the operating profit. But since 2017, Marksans Pharma is growing consistently every year. Company's margin zoomed from single digit all the way to 25% during COVID, but then normalized to current levels of 21%. Company's net profit also zoomed exponentially during COVID and then corrected post-COVID. However, net profits have already surpassed COVID highs and today at 334 crore. In the balance sheet, company's borrowing has increased in the past, but company has very high cash and cash equivalent that stands at 674 crore for FY24. So company is net cash rich. It is consistently generating huge cash from operation. Its latest ROE is 16.5%, ROC 20%, and debt to equity is 0.12, which is negligible. So financials are looking very solid with very good top line and bottom line growth, high profitability, negligible debt, and high cash from operation. Now, if you look at company's share price movement in last 1 year, stock moved from levels of 110 to 160, then consolidated in the range for a few months, and then in last couple of months, there's a strong upside in the share price with high volume. In spite of excellent returns, company is currently trading at a P of around 30-31 and command a market cap of around 10,000 crore. Now, considering the growth potential, I believe that Marksans valuations are still reasonable and there's good upside potential. But before we conclude anything, let's look at the final part of the video, that is key risk in the growth thesis. So first key risk is regulation risk. Please note that pharma sector is highly regulated. Especially Marksans Pharma operate in highly regulated market of US and Europe. And there are strict regulatory standards with frequent inspection. So there is always a high risk of non-approval of their products in the market or penalty in case of non-compliance of regulation. On the other side, it also creates a strong anti-barrier for new players. It's not easy to crack the market of US and Europe. And once you do that, only sky is the limit. Then second risk is competition risk. US and European market are extremely competitive and it's not easy to get a shelf space in the drugstore for OTC drug. So this competition risk would always exist. Third is raw material volatility risk. Marksans import KSM, that is key starting material, and API for its drug as raw material. So any inflationary environment for KSM and API can lead to pressure in gross margin and EBITDA. Then fourth is risk of wrong or high priced acquisition. Since Marksans does a lot of acquisition for its growth, there's always a risk of acquisition to go wrong and they may end up acquiring a very expensive company. And final fifth risk is currency fluctuation risk. Large part of revenue of the company comes from export and hence the company faces risk of currency fluctuation. Depreciation of your USD, Euro and Pound could have an adverse impact on its revenue and profitability. So in this video, we discussed the fundamental analysis of Marksans Pharma that was added by MIT in latest June 24 holding. Company is in the business of generic medicine across OTC and prescription segment, mainly in the US, UK and European regions or regulated region. Fundamentally, company is looking very promising with solid business model, decades of experience, strong financials, and the future growth potential is looking solid with strong product pipeline, acquisitions, and expansion of facility. Management expect the top line to grow 50% in the next 2 years and currently trading at a PE ratio of around 30-31 with market cap of around 10,000 crore. Considering the growth potential, currently valuation looks attractive, although it's not an easy sector to make money. There are multiple risks including regulation risk, competition risk, raw material fluctuation, then currency fluctuation and so on. So make sure that you understand all the aspects of the company before investing your money. Now tell me in the comment which is your most preferred pharma stock. Also let me know if you want me to cover any other company. I'll see you next video. Till then, take care.